Hey guys, happy Tuesday. Brian Davis and Denny Sibley here from Spark Rental.
How
Glad
are
to
you
be
doing?
with you.
Sorry.
You missed the cue there, Denny. Where
I did. I did. I'm a little off. We're talking about taxes. No, just get.
Yeah, really. Well, everyone's favorite topic, right? Hardly. Uh, but we are going to be talking about ways to reduce your tax bill as a real estate investor today, specifically through bonus depreciation. So it's a bit of a complicated topic. Denny and I were talking about that before we went live. So let's start really simple, Denny, with just the basics. What is regular depreciation? Like, how does regular, normal depreciation work for real estate investors?
Well, regular depreciation is over time. What is it, 21, 27.5 that you can take per year?
Well,
So
for
it's
the building, yeah. So
right.
for
Well, when
the
it
actual
pertains,
building itself, 27 and a half years, you
right.
can deduct the value of the building over 27 and a half years. Other types of property, like other classifications of property, such as personal property, machinery, that sort of thing, they each have different time periods over
Right,
which you
right.
can
Like
depreciate it.
my husband's, he has these big machines for his contracting business, and I think they're 9 years.
Yeah. Yeah. So for some of them, it's 5 years, some of them it's 7 years, 9 years, 15 years. So you can deduct the total value of it, but spread over
Over
time.
time.
So
Mhm.
if it's 9 years, for example, then each year you deduct 1/9 of the value of
Of
it.
that.
Uh, so that's how regular depreciation works. And if you go out and buy an investment property, such as a rental property,
Mhm.
or if you invest in a syndication deal, for example, you can deduct 1/27 and a half of the value of the building over the course of the first 27 and a half years that you own it. And we do have a depreciation calculator, by the way, because I know that this gets a little conceptual, and it really helps to look at the math with a calculator and see it laid out
And
there. So I'll add a
please understand that we're not certified accountants or anything like that. We are real estate investors,
right.
but we want to
Yeah.
keep on top of this stuff because it affects us.
Something tells me
Um,
that that's not it's not the last time that we'll be making that disclosure in this podcast episode. So, all right. So that's how regular depreciation works, particularly for real estate investors. Denny, what is bonus depreciation?
Bonus is immediate and unlimited. So you, as an real estate investor, you can deduct capital improvements, the cost of capital improvements, the full cost in the same tax year that that expense is incurred. So especially when you buy like something new or for people who flip and those kinds of things, it can be very advantageous.
Yeah. So uh, normally with capital improvements, it just gets added to the value of the building and it has to be depreciated over 27 and a half years.
Right.
But this bonus depreciation rule was created in the Tax Cuts and Jobs Act of 2017, where you can deduct the entire cost of a capital improvement in the same year that you paid for it, which is really nice for real estate investors. It gives you a big tax write-off in the
And it's
same year that you have that
unlimited.
expense.
So there's no limits to how much. Whereas like your Section 179 deductions, those have limits. And so, you know, that's a big thing. Um, so the one thing that, especially as a passive investor, you will get the same tax benefits. So you would get that bonus depreciation, and it passes straight through to you. So it can be advantageous to real estate investors, flippers, and passive. Except passive, we don't do all the work, but we get all the
Right,
benefits.
right. The sponsor, the syndicator, when you invest in a real estate syndication deal as a passive investor, the syndicator does all of this, the depreciation calculations for you, and it just comes off of your bottom line number on your K1 that you receive
Right.
for your tax return. And if you're not familiar with what a real estate syndication is, we will put a link to that I'll add a link to that in the comments as well. It's a great way to invest in real estate passively without the headaches of becoming a landlord. And we actually have a real estate investing club where this is exactly what we invest in every single month. So um, makes it really easy to diversify and invest in real estate and get huge returns and great tax benefits without all the headaches and hassles of becoming a landlord.
Right.
All right, Denny, I didn't mean to interrupt you.
Oh, no problem. So just to give you an example of bonus depreciation, and taxes are complicated and they call things everything. So you just have to keep and keep up with this. But more important, here I go again. Make sure you have a good accountant. So
That's the second time. I'm guessing there might be a third time.
Brian makes fun of me because I disclose too much. Or
No,
all right,
no,
what
not
is it?
not
Not
too
disclose
much.
is cool.
You can never
Um,
CYA too much, right?
so an example would be, say you invest $100,000 into what we were talking about, a syndication, and you receive your K1. It shows the paper loss of 80,000. The current allowance of 100 of our that would give the current allowance of 100% bonus depreciation. So your investment's 100, your paper loss is 80 at 100. Now, with the drops that are coming, and that's what we're here to talk about, there's a phase out happening of depreciation. And if that were to happen, like say it drops to the 50% mark, well, that takes that 80% loss down to 40%. 40. So now we're looking at from 80,000 to 40,000. So that's kind of a crappy thing, for a lack of a better word.
Well, I think we need to dive a little bit deeper into that because I think that this is still really confusing for people. So, as part of the Tax Cuts and Jobs Act of 2017, uh, so they created this bonus depreciation where you could write off 100% of the cost of capital improvements in the same year that you make them.
Right.
But they put time limits on this. It's not forever. It phases out, and it starts phasing out at the end of last year, actually. So in 2022, investors could take 100% bonus depreciation. This tax year for 2023, that drops down to 80%. In
Mhm.
2024, it drops down to 60%. 2025, it drops down to 40%. In 2026, drops down to 20%. You can see where this is going. By 2027 and beyond, 0%. There's no more bonus depreciation. So it's phasing out over the course of the next 4 or 5 years. So that means that if you are interested in investing in real estate and taking this accelerated depreciation,
Right.
the clock is ticking. You want to get on this sooner rather than later. Um, so that doesn't mean, by the way, that depreciation itself disappears,
Right.
over the course of the next few years.
It's the
The same,
immediate.
yeah, it's being able to take all of it at once that is disappearing, but you can still normally depreciate your assets. Everything from personal property up to the building itself that you've invested in. And by personal property, by the way, an example of that in the real estate context are things like kitchen appliances that are in the
Hmm.
property. So you can reclassify things in the property with faster depreciation schedules.
Yeah.
And it looks like I lost Denny there.
No, do you not hear me? Well, we are. I don't know whether we lost Brian or me. So I'm going to keep going. So there are pros in this. Up there he comes. Did you
Sorry
lose
about
me
that.
or did I lose you? I never know anymore with internet,
Yeah.
you know?
No, there's a big thunderstorm rolling through here, and it's making the internet a little wonky. So sorry about
Gotcha.
that, Denny.
Oh no, that's okay. We have spring weather actually for the first time in I don't know how long. Anyway.
9 months, right?
Serious. So you want to make sure and understand this, and there is a ton of information. We've provided some information, but like Brian had said, bonus depreciation allows an investor to make improvements and then deduct the entire expense in that same year, rather than recovering it over a number of years. And by doing that, a real estate investor may reduce or eliminate their taxable net income, which can help. Um, but you can also carry forward any unused loss in upcoming years. So, if there are pros, for instance, if you claim bonus depreciation, you may be subject to depreciation recapture when you sell the property. So, that means that you have to pay back a percentage of the value that was deducted in the first place.
So that's a
So,
downside to depreciation in general.
right, right. So the fact
But
that it,
and some, by the way, some investors have this mindset of, oh, well, I just won't take depreciation if I'm going to have to repay it anyway.
mhm,
You have to repay it whether you take it or not. And my CPA, which I didn't know was the case until my CPA told me so a few years back. So if you don't take depreciation, you're going to get hammered with taxes when you sell the property. Uh, and so you're basically paying taxes twice. So always take depreciation. Um, Consider it a free loan from Uncle Sam. You get to take the big tax write off now. Yes, that will get added to your tax bill later on,
mhm.
but that later on is probably years from now. So take the interest free loan from Uncle Sam and don't look a gift horse in the mouth, right?
Now, the sad thing about this is bonus depreciation is definitely a huge benefit. It results in lower taxes, higher returns, and whatnot. So, like Brian said earlier, given this timeline we have, because it is still hanging, but it's just dropping down, down, down. So, you want to, get your investments as quick as you can in the next couple of years so that you can utilize that benefit. Um, and that's basically it. And again, you want to talk to your accountants about this, and how to utilize it, to your personal taxes the best way. Um, and then, look, we don't know what's going to happen. We were talking about that earlier. Um, this could come back. It could, who knows anymore? Any given day, we have something new they take away or maybe possibly give us. So you just don't
Yeah.
know.
I mean, it was originally designed to stimulate the economy by
Mhm.
encouraging and incentivizing businesses to invest in these kinds of big capital improvements, and buying new machinery, buying new properties and expanding their businesses. So it was an incentive to try to drive economic growth. Um, we'll see what happens over the next few years. But and it depends on who's in power in DC at any given time. If the economy ends up needing a big old shot in the arm, they may extend the bonus depreciation rules here. Um, so we'll see. We'll just have to see what
Yeah,
happens in DC. Uh, but invest now if you want to take accelerated bonus depreciation. Denny, is there
absolutely.
anything else that you want to cover on this topic before we wrap up this episode?
No, I think that is it.
All right. Well, great to see you guys. Leave us a glowing review, if you will, as your good deed for the
Even
day.
as we
Uh,
froze up.
yeah, 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 exactly. Uh, and we will look forward to seeing you guys next Tuesday, talking more things real estate investing. All right.
Absolutely.
Have a good
Have a
one now.
great day.